Our next guest, which is Jensen Huang, the co-founder of Likefolio.com, who's going to give us some insights on, I think, the stock that has more attention within the market than any at the moment and has for the last few years. That, of course, NVIDIA. You know, Landon, I was going to ask you if you could find something negative in the data around NVIDIA, but I don't even want to challenge you. Just tell me about the data that you guys are tracking for this, because I imagine the only difficult thing would be that it's mostly a B2B business. So how do you guys track sentiment around NVIDIA?
Yeah, I tell you, the most negative thing I could find is that their happiness levels are basically the same as AMD and Intel. That's it. I mean, everything else they're leading far and away. And it is interesting that it's B2B. I mean, I can remember when this company was, you know, computer graphics cards back in the day, the GeForce cards, and that was it. Like, that's what they did. And now it's, you know, over time that became what you used to mine cryptocurrency because they could do more calculations because of the polygons and all the technical stuff. It's incredible how far this company has come. And they are by far and away, you guys talked about it, they're the leader. I mean, there's an arms race going on in AI right now, and they are the clear leader with dominating 70 to somewhere between 70 and 90% of the AI market share. They just had that new chip that they talked about coming out, Blackwell. It's 3 to 5 times more powerful than the current generation, and it's already sold out for next year. I mean, it's going to be decreasing the time and energy costs for software development and all kinds of different things. And it's incredible how quickly this is growing. I mean, I know you guys talked about that, the Tesla show yesterday, and you know, I think it was a little disappointing for a lot of investors. But if you kind of step back and think of what it's going to become, and you maybe have all of these robo-taxis and delivery services and an Optimus in every home, AI is powering all of that. And the only way that kind of stuff is possible is if you have chips like NVIDIA is making. And
it is anticipated that the ability to run AI models on smartphones and PCs will increase as semiconductor firms continue to innovate by boosting processing power and memory. Studies suggest that in the coming years, the percentage of smartphones that can run complex AI models may increase dramatically. Leading chip makers are developing technologies like chipset designs, which enable them to build processors with higher power levels without reducing the circuitry's dimensions. Investors may see growth and new prospects in the consumer electronics market as a result of Edge AI's ascent, since customers would probably upgrade their devices to take advantage of the expanded AI features. By 2027, UBS analysts predict that the combined sales of PCs and smartphones might surpass $700 billion. In the end, Edge AI's success depends on creating engaging applications that users value highly enough to spend money on. The NVIDIA Corporation offers networking, graphics, and computer technologies. Although the investment firm is confident that the company will record another strong 40% growth in cloud data center capex next year, Atif Malik, a Citi analyst, recently kept the stock's $150 price target and buy rating intact. However, Malik also believes that the stock will remain range-bound through the Consumer Electronics Show in January. Longer ahead, the advice predicts that AI adoption will continue in the third and fourth innings, noting that in the April 2025 quarter, Blackwell-driven sales and gross margin inflection will occur. The confirmation of a bull market by the S&P 500 early this year had investors on tenterhooks. The market has continued to increase during the bull run, setting new records, which has supported growth in earnings and sales across the board. Looking forward, it seems that the rising trend has crested, as market indices are at all-time highs. It hasn't happened as planned, despite huge expectations that stocks would soar when the Federal Reserve announced it would be cutting interest rates to help a faltering economy. It's becoming more obvious that, given the numerous problems facing the global economy, investors are more susceptible to growth fears. The Middle East's growing geopolitical tensions, which pose a threat to supply chain networks, are at the top of the list. Rising energy costs as a result of a full-fledged conflict could lead to increased inflation, which is worrying the markets. Investors should already be overweight defensive stocks as global growth slows due to weakening fundamentals, according to UBS analysts. Although the bank is cautious and advises its clients to concentrate on vital industries like utilities and pharmaceuticals, which consistently do well during a downturn, UBS does not predict a significant one. Despite the fact that investors are shifting more and more toward defensive positions due to worries about geopolitical unrest and the weakening global economy, Andrew Sliman of Morgan Stanley Investment Management advises against taking this approach.
There's a lot of estimates out there about, the demand for AI being plus 20% a year over the next 5 years, or maybe more, maybe 30%. I think it's going to kind of flip. It's going to go over a cliff when all of a sudden it's going to hit real world applications and it's going to completely change the game. And I think in 1 year, it's going to go well over 100% demand. And it's in NVIDIA's, they've got to be able to turn up the output. I mean, I know that their partner in Taiwan is already expanding. That's great. But it's going to flip one day, and it's going to go from GPT being this really cool thing that you can kind of, write better with and create some presentations and things like that, to it's going to be software developers out of a job and, creating software code in minutes instead of months. And I think things are going to change extremely quickly, and NVIDIA is leading the pack. So it's hard to not be bullish on them. It's almost like you can put blinders on, and whatever the price is, just buy it because it has to go up, right? I think that's how people have thought about it. I guess the downside is when you look at what the revenue growth has been, it was only up 122% year over year last report. And that's bad because the one before it was up 260%. So it's slowing down. It's still doubling, but it's slowing down. So it's just a matter of ratios. But once you start thinking about the exponential growth of AI, it's not, you have to kind of get out of the linear growth of the stock and think about the demand for the products that they're creating is going to be exponential. So, obviously I'm pretty bullish on this company.
In just 5 days, NVIDIA's stock worth increased by an astounding $400 billion, creating quite a stir in the IT and business worlds. NVIDIA has surpassed several rivals to reach an astounding $3.26 trillion, according to Business Insider Africa. Nevertheless, in terms of global market value, it still lags behind Apple and Microsoft. The mere $400 billion increase eclipses Costco's roughly $250 billion market worth, despite the retail behemoth reporting an astounding $254 billion in revenue for the previous year. The enormous increase is mostly attributable to NVIDIA's AI-focused CPUs. Dubbed a game changer, the Blackwell chip was developed especially for artificial intelligence and was just released. According to Jensen Huang, CEO of NVIDIA, it is the driving force behind this new industrial revolution. Prominent technological companies such as Microsoft, Oracle, and Google appear to be in agreement, endorsing NVIDIA's technology and placing bets on its potential future influence. According to Reuters, NVIDIA's stock increased by 170% in 2024 alone. Since early 2023, its growth has been nothing short of phenomenal, having increased by 800%. The financial figures are astounding. NVIDIA reported an incredible $30 billion in profit from $61 billion in revenue last year, while Costco reported a $7.4 billion net income. This demonstrates just how profitable the tech industry has grown, particularly when contrasted with more established giants like Costco. The driving force behind NVIDIA's incredible rise is Jensen Huang, who is currently valued at $106 billion. NVIDIA has established itself as a major participant in the continuing AI revolution with its emphasis on AI chip development. Beth Kindig of I/O Fund said that NVIDIA's then-anticipated Blackwell GPU hardware, along by its QDA software framework, could propel the company to a $10 trillion valuation by 2030. It's difficult to ignore how NVIDIA's success has spread. The Magnificent Seven tech behemoths, including Apple, Meta, and Alphabet, are all benefiting from the AI trend, with NVIDIA's technology driving up demand for their shares by 1%. NVIDIA's chips are an essential component of the puzzle that is integrating AI into everyday life, propelling the tech sector to new heights. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, Please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Landon, we talk so much about the Blackwell and it being sold out for 2025. There's still demand for some of the older unit chips, right? I mean, NVIDIA can clearly fill their coffers just by selling those chips, because there's a lot of countries throughout the world that don't even have their processing speed to be able to use those Blackwell chips. Can you talk about that for a moment?
Yeah, I mean, I think you think about where companies are, what they're going to be building, and it's whatever is on the shelf at NVIDIA is an advancement to what you have if you're a little bit behind. I mean, if I started an AI company tomorrow, I'd take 2 years ago model, and I'd be like, wow, this is great. This is really going to help us. And then as things move on, you're going to continue to advance. So I do think there becomes a time when everyone has to be the top in order to, be the market leader in some area. For example, we talked about Optimus. Whoever creates the first household robot, it needs to be the best one. So they're going to demand the best product. But there's a lot of applications where really good is good enough. It doesn't have to be the very top model. And what's crazy is how much these things are actually increasing on a year-over-year basis. When you look at the model sizes and all of the calculations that they're able to do, it's not linear at all. I mean, it is 100% exponential, and technologies.
Because there is a high demand for NVIDIA Corporation's graphic processing units, which power a variety of AI models, the company is able to maintain its leadership in artificial intelligence. Due to record-breaking sales and profits, the corporation has become the most valuable in the world thanks to the artificial intelligence craze. In the second quarter, net income more than doubled to $16.6 billion, while revenue increased by 122% to $30 billion. The business anticipates revenue in Q3 will rise by 80% to $32.5 billion. Hedge funds consider this company to be among the most promising growth stocks, based on the pace at which its earnings and revenues are increasing while the artificial intelligence craze is only getting started. There is still potential for greater gains, even though NVIDIA Corporation has made strong increases over the last year, which has caused the company to trade at a premium with a price-to-earnings multiple of 34. The insane demand for the company's new Blackwell chip is likely to drive the stock to yet another all-time high. We can really drive the innovation cycle and triple down so that we can increase our capabilities, increase our throughput, lower our costs, and use less energy, stated Jensen Huang, CEO of Blackwell. It is not anticipated that the trend would alter, as the company has produced triple-digit percentage revenue increase for 5 consecutive quarters. The Federal Reserve's announcement of a 50 basis point interest rate decrease and indications of more rate cuts should encourage businesses to invest in artificial intelligence, which will increase demand for NVIDIA processors. The market for AI processors saw significant growth, and NVIDIA Corporation is benefiting greatly from the growth of data centers. As evidence of the enormous prospects in the market, the company has set its own projection for revenue growth for the current quarter, which calls for a 79% increase. Given that the board of NVIDIA Corporation approved an extra $50 billion in share buybacks last summer, there is a solid consensus that the stock is worthwhile, with an average price objective of $152.44, which suggests a potential upside of 14.6%. It is one of the companies that is classified as a buy. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But when you look at this chart, this looks like a linear chart, right? It's going up and to the right. But then notice the scale on the left. That's not a linear scale. That is an exponential scale. So that is 10x. Every time it moves up one of those numbers, it's 10x. So if you were to put this on a linear scale, it would just look like a hockey stick. And so it is incredible what's coming down the line. And I think, honestly, I think it's going to happen a lot sooner than people think. I think that there's going to be a massive disruption competition in labor markets when it comes to, if you're at a desk job, if you type on a keyboard, your job is in jeopardy. And all of those companies that employ thousands of people that do that kind of work, their profits, their margins are going to go through the roof, and or the price to the consumer is going to go to the floor because it's going to be so much cheaper. So it's going to be an interesting move, I think, in the economy. And all of it, again, talking about the stock, all of it is going to funnel back to the market leaders in this. NVIDIA right now, but AMD is trying to take a piece out of them, but NVIDIA for sure right now.
Yeah, Landon, that last point I think is the real uncertainty is where does this head, right? Because a lot of the same things were said around the internet time, and it actually created more opportunity. But you can naturally get to a point where it's like, hey, you have a huge subset, maybe even a vast majority of the population that's just unproductive, even if there is a ton of productivity happening in the world. So, look, I don't know. There's certainly uncertainties around this, but for the companies involved and those invested in it, I mean, few companies have, it's crazy to say in the case of NVIDIA, under-promised and over-delivered, as crazy as that sounds, than NVIDIA has. But
experienced investors won't be shocked to see stories about firms exceeding revenue and profit projections as another corporate earnings season gets underway. An under-promise/over-delivery scenario is created when Wall Street analysts' estimates are combined with company guidance. In the S&P 500 SPX, corporations often report profit, at least, that exceeds estimates by 70 to 80%. The consensus profit projections for the following quarters and full fiscal years were raised as a result of the beats. The beats are predictable, but their consistency is crucial to long-term support of rising share values. The question now is whether NVIDIA will see any more record-breaking quarters in the future. After increasing by 239% in 2023, the company's stock has returned 172% this year after dividends were reinvested. Based on Thursday's closing price and the FactSet surveyed analysts' consensus 12-month earnings per share projection, the company currently trades at a forward price-to-earnings ratio of 36.7. This may seem expensive in comparison to the weighted forward P/E of 21.8 for the S&P 500, but NVIDIA has been growing its earnings far faster than the index. By the end of 2022, NVIDIA's forward P/E stood at 34.5, and the S&P 500's was 16.7. On November 14, the corporation is anticipated to report its next set of results for the fiscal quarter that concludes on October 27.